Welcome back. Shares of SoFi are surging this morning. The company delivers a beat on the top and the bottom line, raises guidance going into year end, and reports some record high loan originations and announcing plans to return to crypto investing. Joining us this morning, first on CNBC, is SoFi CEO Anthony Noto. Anthony, great to have you. Good morning.
Good morning, Carl. Thanks for having me.
We mentioned the loan numbers, but also the crypto investing. I mean, they're both powerful themes. Which one is more important right now?
Well, I'd say it's the combination of everything, Carl. We just reported 44% year-over-year revenue growth to $858 million with 29% operating margins. A lot of investors look at something called the rule of 40, which is revenue growth plus your EBITDA or operating income margin. And we hit 70 today, well in excess of 40. So we're seeing the growth of a technology company and the profitability of a financial company in one quarter, but it's actually happened for the last 13 quarters. And the thing that's really driving it is our diverse platform of businesses. Our strategy is to be a one-stop shop, which means we have to have products across borrow, save, spend, invest, and protect. And because we have that broad array of products, we're able to really diversify our growth and put capital in a lot of different areas to grow. This quarter actually saw exceptional growth across all three of our businesses, and that's how we got to 44% growth, which is our highest year-over-year growth rate in the last 2 years, with really strong profitability at 29% margins.
Yeah, we can look at the chart and you can see shares near, I think, at just about a 4-year high, going back to November of 21. Over a 1 month now, Anthony, your shares are outpacing Robinhood's, and I wonder if that is the kind of showdown you expect to get talked about a little bit more.
You know, we are a very different company. We have a very different strategy, especially when it comes to invest. Invest is one product that's important to SoFi. Our formula is that we're helping Americans achieve their financial outcomes that will help them live the American dream. And in order to do that, they have to get their money right. And the formula for that's quite simple. They have to spend less than they make and invest the rest. And when they invest, they have to take a long-term orientation. We try to educate investors to do dollar cost averaging in a diversified way. And our Invest service actually offers a broad range of products. Not only does it offer single stocks and fractional shares, we also offer IPOs, ETFs, automated investing through robo accounts, and our ETFs and robo has a couple of award-winning products. And then we also do private investments and alternative assets. You can invest in venture capital, private credit, private real estate, public long short hedge funds, as well as private growth equity funds. That broad diversification is really focused on long-term investment and the concept of making sure you're spreading your money out to achieve long-term returns.
Well, why are you talking about crypto? Isn't that one of the reasons why the stock has shot up so much, because of the opportunity here for you?
Yeah, I think the reason why the stock is showing the strength is that things like crypto, the recent IPOs from fintech companies, have caused investors to come back to the sector and reevaluate it, given the tremendous growth opportunities that are ahead of us. I mean, we're driving 44% year-over-year revenue growth, and we're just starting to benefit from 2 technology super cycles. We're at an unprecedented point in time where AI and blockchain and crypto will fundamentally change the financial services industry. So that's causing people to come back and look at our company. Some of the recent fintech IPOs have caused them to come back and look at SoFi. And they look over the last 13 quarters at our revenue growth and our margins, and they see that we've beaten the rule of 40 for 13 consecutive quarters, which is what they look for software companies to do, not a fintech company or a financial services company.
What about just general view of your consumer right now? Credit quality, consumer lending, and what that means for the coming months?
Yeah, we are benefiting from unprecedented demand across all of our products. Our lending products are benefiting from people looking to lower their cost of debt. They have run their credit card balances up, and they're paying 24+% interest. They can refinance with us at 12 to 13% interest with no prepayment penalties, no refinancing costs if they want to refinance. So that product is benefiting. We're starting to see a pickup in student loan refinancing. We're also seeing really strong momentum behind SoFi Money, which we've had for 3 years. We opened the bank 4 years ago, and we've had unprecedented growth there, and that continues. The product is very differentiated. We give 3.8% interest, no fees. It's the only place you can send money via Zelle. You can send money via email, via phone number, or you could do self-serve wire transfers. In addition to that, we have our credit card offering as well as home loans. So the combination of those things, we're seeing really strong demand for the consumer, great credit performance, and the spending in our SoFi Money product is also strong.
How broad do you think the loan platform can get, Anthony? Are there other areas that you think you might want to get into?
Yes, and for those that are not familiar, we used to just produce loans for our own company balance sheet and then sell them. And a year ago, we launched the loan platform business, which really complements our technology platform business, where we use our technologies to help serve other people. And so we've built a great underwriting technology, a great marketing technology, origination technology, and servicing technology. So now for asset managers, we're producing loans for them and they pay us a fee. That business has gotten quite large. It's actually now bigger than our student loan refinancing business, which was our first one. Historically, over the last year, we've only done loan platform business in our credit box on volume we did not want to underwrite. This quarter, we added near prime for some asset managers that want near prime underwriting. So we think the market opportunity is very large, in addition to the fact that we've started to tap into this credit card refinancing need from prime customers. And so we originated $8.8 billion of unsecured personal loans, which is by far a record. We used to only do about $2 to $3 billion a quarter.
Finally, with the shares going from basically 9 to 24 in the span of a few months, is there any likelihood that you'll want to raise some capital or kind of reset capital levels?
Listen, we're always looking at our balance sheet and making sure that we have our future plans well capitalized. We feel like our capital ratios are strong. They're obviously available for investors to take a look at, but they're well above our regulatory minimums. The capital market situation is one that we're always evaluating to keep our cost of capital low, but we feel like we have adequate capital on the balance sheet, but could be opportunistic from time to time if it can lower our cost of funding and help give us continued growth capital. But right now, our plans are adequately funded with our balance sheet, but we'll continue to evaluate opportunities.
Anthony, what a run. Watching it with great interest. It's good to have you back. Anthony Noto
Thank you.
from SoFi. Thanks.